Hello and welcome everyone to the Week Ahead Commodity Report, where we of course will be reviewing the markets for the week ahead. So as we go into a new week here, on Monday we have the USA on public holiday. We also have the Chinese New Year celebrations, which means China will be in their public holidays. So with this, we can expect some thinner than usual liquidity at the start of the week, which can create exaggerated moves. Now, the last week has certainly seen some explosive moves here. We've actually benefited from a huge breakout on palladium in the last week, closing at 3-week highs on Friday, which puts our two positions up over 3,000 points into the close. So for every one lot contract that you would be trading palladium, that's over $30,000 of profit. For every 10 lot contract that you would be trading, that's $3 million of profit. Now, of course, it's not only palladium here. Platinum prices have broken out to 6-year highs last week. And with metal prices hitting the highest in years, oil trading well above $50 a barrel, we're now transitioning into a super cycle for commodities. Now, everyone from Goldman Sachs to Bank of America, they have been calling for a structural bull market in commodities since the turn of this year. JP Morgan is the latest Wall Street bank predicting the start of a new commodities super cycle in 2021. In fact, JP Morgan noted in their latest report a long-term boom across the commodities complex was underway and there could be big gains ahead for the entire sector. Now, the new super cycle will be driven by the post-pandemic recovery, inflation, ultra-accommodative monetary policies, a deteriorating US dollar, near zero to negative interest rates, and a global fight against climate change. The commodity super cycles, these are rare. There've only been 4 commodity super cycles in the last 100 years, and the last super cycle that peaked in the aftermath of the 2008 global financial crisis after a 12-year upswing. And now we're just at the beginning of the 5th, which is quite literally presenting an opportunity of a lifetime for traders. Last week, platinum took the center stage, rallying to 6-year highs. Platinum has outperformed its peers this year. It spent most of 2020 lagging behind, in fact, breaking down to 18-year lows this time last year. Now, platinum's had an explosive slingshot move higher over the last 12 months here, which is now up 70% in the last year. Meanwhile, rhodium, which is like platinum on steroids, has surged from $3,000 in February 2019 to an all-time high of $21,000 in February 2021. That's a phenomenal gain of 600% within the last 2 years. Other commodities which have also joined in with the action has been copper prices, which broke out to their highest levels since October of 2012 just last week, whilst oil prices soared past $60 a barrel for the first time in more than a year, which is up over 218% from the lows seen in April of 2020. And let's not forget silver, which earlier this month hit $30 an ounce for the first time since 2013. The upswing in commodity prices is nothing far from exceptional. In total, 27 commodities, ranging from the metals, energies to soft commodities, have all posted positive returns over the last 6 months to date, and this is just the beginning. Goldman Sachs even predicts oil prices could surge to $100 a barrel one more time during the current commodity super cycle. However, as we know, bull markets, they do not move up in a straight line. They zigzag higher, which presents savvy traders with incredible back-to-back lucrative opportunities to capitalize on these trading conditions. It is a trader's market. Commodities are now starting to attract a lot of attention on a scale not seen since the global financial crisis in 2008, from everyday investors looking to protect their savings from inflation and near to negative interest rates. And as retail and institutional interest continues to grow, this ultimately will keep driving prices higher in the long term, especially considering that the fundamental backdrop for the entire commodities complex remains extremely bullish, supported by a growing list of influential factors which includes money printing, more stimulus, an accommodative Fed, risk of inflation, new COVID variants, near to negative interest rates, and waning confidence in job and business security. We're now in a new trading landscape. And of course, if you want to thrive and not just survive in this new trading landscape, this is where you want to be utilizing a professional, research-driven approach to the market, where it's so important to have access to the right data at the right time. It's the single greatest difference between ordinary and extraordinary results. And trading like every other misguided retail trader, just using outdated technical analysis or gimmicky technical indicators, will just not work. Now, on the radar next week, the biggest market moving events will include the Federal Reserve and the European Central Bank meeting minutes. That's scheduled for release on Wednesday and Thursday. Traders will focus on policy meeting minutes for clues on future stimulus. Traders will also be watching any new updates regarding President Biden's massive $1.9 trillion economic stimulus package. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. Firstly, we'll start off with gold here and we'll keep it very straightforward. So if you drop over to the weekly chart for gold, you will see where we've had a positive gain in the latest week here. Gold continues to be very sticky to its yearly moving average. We've come back in and tapped that level yet again on Friday and also the previous week as well, which resides at that very key magnetic zone around the 1800 level, where each time we're coming down to that zone, gold spends very little time. In fact, each time we've dipped below 1800, it's turned out to be a fantastic buying opportunity. However, where we've seen the challenge with many traders or investors is where they've utilized a longer term buy and hold strategy with the metals, and essentially they've made no money here since July, where they've seen their portfolio accelerate to the all-time highs we saw back in August. And since then, the gold market, of course, has been range bound to correcting, and it's still just a great market to be coming in and out of trading those ranges. As I mentioned last week, we banked 800 points at the beginning of the week on gold. We've then subsequently seen the pullback that we've been expecting in the lead up to the Chinese Lunar New Year holidays and the US public holiday on Monday as well. So we've taken the opportunity to then build back lower positions. In fact, some of our lowest entries that we managed to establish on Friday shot up immediately into profit during the US session. So what we've seen here is a nice bounce again from an area of key liquidity here for gold. Again, I would keep it really straightforward. If you take it out to the higher time frames here, you will see where we have a lot of liquidity around that 1800 zone. You typically have to be quite quick to get your entries at that level, and what you don't want to do is be FOMOing in. So each time you can see here that we've had a rally back towards that 1850 handle, that zone has typically so far provided a lot of resistance. Another point that I would look at on gold going into next week is platinum and also silver here as well, which both had strong moves into the close. So platinum closed up 1.5% on Friday, but it was up 10% for the week and it's up 15% so far in February. Typically the month of February is very strong for platinum. So you can see here where it's closed limit up on the day, so it's closed at its daily highs here, and I'm looking out for platinum for another breakout above the 6-year highs here as we go into next week. And if we do see that follow through to the upside, you can then expect platinum to be leading silver and gold as well. So gold is lagging. Silver has now tested $27 per ounce 4 times over the last week. Each time we're coming down to that level, silver has been catching a bid. You can see very clearly here where it's not closing at these levels. It is catching a bid, and we've seen a reversal there on Friday, which does set up as well for a continuation. So what I would look out on silver, on platinum, is to lead gold higher. If we do start to pick up momentum, break above the 27 to 28 zone here going into next week, this is where you could see the metals accelerate higher. And again, bear in mind we have China on their 1-week public holidays, and it's a public holiday in the USA on Monday as well, which can create exaggerated moves in the market. So I would be looking out for platinum and silver to lead gold into next week. So if we do see that additional follow through to the upside, this is where you could start seeing gold catch a bid as we go into next week. The key levels, of course, to break out from would be above Friday's highs here, and then making a reattempt to last week's highs, the swing highs here that we saw tested in the middle of the week. Then we had the subsequent pullback back down to area of liquidity, and then if we do see silver and platinum continue to lead this rally to the upside with the metals, this is the price action that I would look at on gold as we go into next week. Again, if you want to keep it really straightforward, go over to the higher time frames for gold. You'll see exactly what is going on at the moment, where we've had another retest into a key area of liquidity. Decent support, strong support has come in again at that zone. Now, the other point to look out for at the start of the week could be some counter flow here for gold, where it's often the case at the start of the week, but it does depend on the public holiday in the USA. You can get some pressure to the downside as we go into the London and the European session. However, that could also very quickly get bid. Again, typically gold at the moment spends very little time below the 1800 level, so I would keep an eye on that going into next week. And of course, palladium prices, really strong move into the close on Friday that put both of our positions up over 3,000 points of profit. You can see the slingshot move that we've had here over the last week of key liquidity of the 2,200 zone. That just provided a fantastic opportunity to build further positions. You can see where we've come back up towards the neckline on Friday. Ultimately, I'm expecting higher prices here throughout the month of February for palladium. It's just a great market to take advantage of. And then finally, we've got exposure to energies here. We are long, and it's been a really solid move here into the close on Friday, with energies breaking out and closing at 1-year highs. So again, we're moving into this commodity super cycle where we're seeing multiple breakouts across energies, across metals, and you absolutely do not want to miss out. As you know, we're going through an era of exponential change. The pandemic, ongoing global restrictions and lockdowns are the new normal. This is not going away anytime soon. It's these times of uncertainty, increasing job insecurity, near to zero interest rates, that the importance of having an essential skill like trading becomes a must-have necessity. If 2020 has taught us anything, it's you should never rely on just one income stream. Building multiple streams of income is no longer an option. It's a priority to make yourself recession-proof and thrive in this new era of change, not just survive. If you want to gain that ultimate edge to really supercharge your wealth in these fast-moving and highly lucrative markets, you need to trade like the hedge funds, the money managers, the institutions, utilizing a professional research-driven approach, having access to the right data at the right time. It's the single greatest difference between ordinary and extraordinary results. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy, and high levels of profitability. Trading like every other misguided retail trader out there that uses outdated technical analysis and gimmicky technical indicators, it will not work. You want to be utilizing data, market intelligence, research, awareness of capital flows, key levels of liquidity, daily, weekly, monthly cycles in the market. Marry that up with macroeconomics, intermarket correlations, ratios, seasonality, and have awareness of what the hedge funds, money managers, banks, and institutions are doing in the market in real time, and that will help you hugely to get an edge. So with that, if you would like to find out more, join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program. There is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You have access to real-time trade ideas, institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.